Hi, Jim. This is Nicole from Michigan. I have a question about inheritances. So, I inherited a little over $100,000 from my dad when he died, and it was just out of a savings account, so cash. I'm wondering if there's any tax implications on that money. Also, my stepmom inherited his 401k, IRA, other savings accounts, and she's not sure who to go to for advice. She's in her 50s, so she's got a long life ahead of her, hopefully, and I'm not sure if I should send her to a financial advisor or an accountant or both. Do you have any advice for me on advising her what to do?
Okay, Nicole from Michigan, great question. I'm sorry to hear your loss. It's wonderful that you've inherited some money, but I think for most of us, we would rather have the person we inherited it from than the money that we got from them. $100,000 cash, not complicated at all. There's no tax due to you in most states. Now, I would have to look up Michigan and make sure there's not an inheritance tax there. I don't think there is. Most states only charge no estate tax at all, or just an estate tax. But Michigan doesn't have an inheritance or an estate tax, according to Google, and so you're fine there. As long as the person who died did not have an estate above the federal state exemption limits, which I don't have in front of me right now, but for a married couple, it's like 23 million something. If you're single, it's half that. As long as their estate wasn't above that, they don't owe any estate taxes either. And so that basically $100,000 for most people comes to you totally tax-free. So congratulations on that. You can use it for whatever you want. You can pay off your student loans. You can use it for a house down payment. You can spend it on an incredible vacation around the world for 3 months. Or you can put it in an investment account. It's technically not earned income, so you can't put it into your retirement accounts, but you can live off of it and put the money you're earning into your retirement account since money is fungible. So all kinds of things that you can do with that $100,000. It's almost surely tax-free to you. Your mother-in-law, of course, has a little more complicated situation. She has essentially inherited 401ks and IRAs. That 401k can likely be rolled over into an inherited IRA. And the rules for inherited IRAs are that you can only stretch them for 10 years. So you can take the money out anytime you like, no matter what age you're at, and it comes out penalty-free. Although if it's tax-deferred money, you'll owe taxes on it at your marginal tax rate. But if, after 10 years, it has to come out of the account. That's as long as you can stretch an account. And so, you may want to spread that out over a few years so you don't get a big, huge tax hit all at once. It really depends on your income, what your income is going to be in 10 years, how big the account is and how much has to come out. You didn't give me any of that information, so I can't really say much there, but those are the considerations to look into. Of course, Roth money, whether it's a Roth 401k, Roth IRA, there's no taxes due when that comes out of the account. So it's a great account to inherit. If you have a choice to leave a Roth IRA to heirs or a traditional IRA to heirs, and you're also leaving money to charity, far better to leave the tax-deferred money to charity. Your heirs will really appreciate that. But it's a little more complicated situation. So what should she do as far as advice? Well, if she doesn't have any sort of a written financial plan, she needed that before she inherited the money, right? And so she still needs it, even though she inherited the money. Maybe this is the event that triggers her to finally get a plan in place. If so, that's a good thing. If she does not feel comfortable putting together a written plan, which it sounds like she doesn't, and isn't really interested in being a hobbyist and learning to do this stuff herself, then yes, she needs a good financial advisor. She wants somebody who gives good advice at a fair price. At the White Coat Investor, we have a recommended list for financial advisors. Now, these are definitely people that gear toward high earners, right? They're people who have their practices mostly full of people like physicians and dentists, but they give advice to other people as well. But there's lots of other financial advisors out there. You want a good financial planner. If you just want a little bit of advice for a few hours, or you want a plan put together, you can usually get that for a flat rate or an hourly rate. Those hourly rates range anywhere from $150 an hour to $500 an hour, though. They're not cheap. But if you don't know what you're doing, it's almost surely going to be worthwhile. And hopefully you view them more as a teacher than as someone who's just doing it for you. And so I would recommend checking out our advisors, seeing what a good advisor looks like, what the price structure looks like. And you're usually looking at paying something like mid 4 figures for a good financial plan and good advice each year. But that's what I would do if you don't know what you're doing, if you're not interested in learning how to do this stuff yourself, then it's time to go get good advice. Just make sure you're getting good advice at a fair price. If you want your questions answered by the White Coat Investor, record your question at whitecoatinvestor.com/YQA or click the link in the description.